Many fear growth in India is decelerating, and they're questioning the wisdom of the Reserve Bank's monetary tightening. But are RBI policies really causing a slowdown? And could it finally take a break from increasing rates? To find out, we have with us Tamal Bandyopadhyay, Deputy Managing Editor at Mint. Sir, would you blame the RBI's successive rate hikes for the slowdown?
Well, I would not use the word blame. I would rather say Reserve Bank of India is responsible for the slowdown. It has been hiking its policy rates. It's till now 10 times since March 2010, from 3.25% to 7.5%. to fight inflation, which has been consciously doing so. Now, inflation which actually came from the food side, it was a food-related inflation, has spilled over to the other segment, has become broad-based. The non-food manufacturing inflation, or the so-called core inflation, is now driving it. It was 8.5% in March. So, Reserve Bank of India wants to dampen, the demand pressure in the economy. It has been doing so. Yes, it is responsible for this, but it has been doing it consciously because it's in its fight against inflation. It has made it very clear that it can compromise on growth in the short term. Inflation is a bigger enemy.
And are we going to see severe credit crunch this year, like the one we saw in the mid-1990s?
Well, we will possibly see credit crunch this year, but not as severe as we had seen in mid-90s. Reserve Bank of India wants banks to go slow in their credit disbursement. That's a very conscious decision. Also, we need to remember the fact that centre's fiscal deficit would definitely be higher than it has been budgeted, which means the market borrowing program, which was originally budgeted at 4.5 trillion, will be definitely more. So the government will crowd out private investment in the market. So there will be problem with money, but it won't be as severe because the context is changed. Indian corporations have much stronger, resilient balance sheet at this point of time. Their cash flows and their cash in hand is much higher than what was the scenario in 1990s.
Finally, do you think RBI is coming to the end of its rate tightening cycle?
It's difficult to predict whether it is very close to the end of rate hiking cycle, but definitely it is coming close to it because rate is at this point 7.5. Reserve Bank of India is conscious that growth is slowing. The key to this would be the corporate profits, the corporate earnings in the first quarter of 2012. That will be a key bearing on Reserve Bank of India's decision, and also the trajectory in which the core inflation moves. I would think another 25 basis point definitely on the card, which means 7.75 policy rate, and that will be very close to the end of the rate tightening cycle.
Thank you, sir, for joining us. And that's all we have in our series, A Slowdown on the Cards. Thank you for watching.